Have you ever found yourself in a financial bind, wondering how to cover unexpected expenses without breaking the bank? Or perhaps you're looking to consolidate debt but don't know where to start? If so, you're not alone. In fact, millions of Americans turn to personal loans each year for financial flexibility. Today, we're diving deep into the world of personal loans, giving you the ultimate guide to what you need to know. By the end of this discussion, you'll be well equipped to make informed decisions regarding your financial future. So, what exactly is a personal loan? Simply put, a personal loan is an unsecured loan that can be used for a variety of reasons. Think of it as a financial tool at your disposal for covering medical bills, financing that dream wedding, or even consolidating existing debt. Unlike secured loans, which require collateral like your home or car, personal loans are primarily based on your creditworthiness and income. This means that you won't have to risk your assets to secure the funds you need. Let's explore some key characteristics of personal loans. First, they are unsecured, meaning you don't have to put up any collateral. No assets at risk, that's a huge relief. Second, personal loans come in a fixed amount. You receive a lump sum of money and pay it back over a set period, typically with a fixed interest rate. This leads us to our third point, the fixed repayment schedule. Monthly payments are predictable, which makes it much easier to budget your finances. Now that we have a basic understanding of what personal loans are, let's dive into how they actually work. The application process can seem daunting, but it's quite straightforward. First, it's essential to research different lenders. Not all lenders are created equal, and comparing terms and rates can save you a lot of money. Next, check your credit score. Most lenders will require a good credit score for approval, so knowing where you stand is crucial. Once you've done your research and checked your credit, it's time to submit your application. This typically involves filling out an online or paper application with personal and financial details. If you're approved, the lender will provide you with the loan amount, interest rate, and repayment terms. Before you sign anything, make sure to review the terms carefully. It's important to understand all fees involved, which brings us to the repayment terms. Personal loans usually have repayment periods ranging from 2 to 7 years. Your monthly payments will depend on several factors, including the loan amount, interest rate, and the loan term itself. For instance, if you borrow a larger amount, your monthly payment will be higher. On the other hand, a lower interest rate can significantly reduce your overall repayment cost. However, it's worth noting that while longer terms can lower your monthly payment, they may also increase the total interest you pay over the life of the loan. Speaking of interest rates, let's talk about what influences them. Your credit score, the lender's policies, and current economic conditions can all affect the rates you receive. Typically, the better your credit score, the lower your interest rate will be. Now, you might be wondering about the types of personal loans available. There are several options designed to cater to different needs. Unsecured personal loans are the most common. They don't require collateral, making them a popular choice among borrowers who may not have assets to pledge. However, because they carry more risk for lenders, you might find that interest rates are often higher. On the other hand, secured personal loans require collateral, which can help lower your interest rate. Common forms of collateral include savings accounts, vehicles, or property. Just remember that if you default on a secured loan, the lender has the right to seize your collateral. Another option is debt consolidation loans. These are specifically designed to help you pay off multiple debts by combining them into a single loan. This can simplify your payments and potentially save you money on interest. Now, let's break down fixed-rate versus variable-rate loans. Fixed-rate loans have a consistent interest rate for the life of the loan, making budgeting easier. In contrast, variable-rate loans might start with a lower interest rate but can fluctuate, leading to unpredictability in your monthly payments. Before you decide to take out a personal loan, it's important to weigh the pros and cons. Let's start with the advantages. Personal loans offer flexibility, allowing you to use the funds for various purposes. Plus, predictable monthly payments make it easier to plan your budget. Many lenders also provide quick funding. In some cases, you could have the money in your account in as little as a day. However, it's crucial to also consider the downsides. Depending on your creditworthiness, interest rates can be high, significantly increasing your total repayment amount. Some lenders may charge origination fees or prepayment penalties, which can add to the cost. And if not managed wisely, a personal loan can lead to increased debt. So, how do you secure the best personal loan? Here are some actionable tips. First, shop around. Different lenders offer varying rates and terms. Use comparison websites to evaluate your options based on interest rates, fees, and repayment terms. Next, take a moment to check your credit report. Before applying, review it for inaccuracies and make efforts to improve your score if possible. A higher score can lead to better rates. It's also essential to understand the loan terms. Read the fine print carefully. Make sure you comprehend all fees, the total cost of the loan, and the repayment schedule before signing anything. If your credit isn't great, consider asking a trusted friend or family member to co-sign the loan. This can improve your chances of securing a better interest rate. And remember, only borrow what you can afford to repay. Taking out more than you need can lead to financial strain. As you embark on your search for a personal loan, consider reputable lenders such as SoFi, which is known for competitive rates and flexible terms. Marcus by Goldman Sachs offers fixed-rate personal loans with no fees. Lightstream provides low-interest loans, particularly for borrowers with good credit, and Discover Personal Loans also offers fixed rates with no hidden fees. In summary, personal loans can be a valuable financial resource when used wisely. They provide flexibility and predictable payments, but it's essential to understand